Welcome back to the program, everyone. I'm your host, as always, Jeff, and hopefully I remember which shoulder. There we go. We point to the right shoulder. There's my Twitter handle. I'm on multiple channels, so maybe you're watching this. Whatever channel you're watching me on, I greatly appreciate it. Please hit the like, share, subscribe, thumb up, whatever the cool buttons are that helps the channel. I greatly appreciate it. So what are we talking about today? Today we're talking about Coinbase, Bitcoin ETFs, and why there are problems on the horizon. Now, that's kind of why this channel or channels like it and that I appear on exist. We want to inform you of things that could be happening in the near future so that you are prepared and you're not scared. You know what's going to happen. You know what could possibly be coming down the pike and how you can get ahead of the problem. So Coinbase. All right. First off, what is the problem with Coinbase and what's going on? So let me share my screen and I will get to the right window so I can share get a couple screens to share. So here we go. All right. So first off, sorry for the small print. I'll try to make it larger. There we go. This is a summary of the Bitcoin ETF tracker. And you will notice one thing on the right here that's very, very common to all of them. The custodian for most of these Bitcoin ETFs happens to be Coinbase. Only Fidelity is not Coinbase. Well, you got BitGo that's using combined with Valkyrie here, but you get pretty much the picture here. Everybody's using Coinbase. So what's the problem here? Well, here's the big story that happened this week, and that is Coinbase custody alone manages 90% of all Bitcoin ETF assets. As a qualified custodian, Coinbase holds a significant portion, overseeing approximately 90% of the total Bitcoin ETF assets. Here's a nice picture of Brian Armstrong. Coinbase CEO welcomes the growing adoption of crypto by traditional financial institutions. The crypto exchange manages 90% of $37 billion worth of Bitcoin ETF assets, and it's growing day by day. U.S. banking institutions make a move to grab a pie of the huge crypto market. Coinbase has reported impressive fourth quarter results. Let's see. In a recent announcement, Coinbase CEO Brian Armstrong disclosed intriguing insights into the substantial majority of Bitcoin ETF assets held within its custodial solutions. The story isn't too long. Let me get through it, but there's important things I want to highlight, and then I'll expand on it. I'll talk about it more. Okay. Coinbase custody is 90%, as I mentioned earlier. In a notable development, Coinbase CEO Brian Armstrong, that's this guy right here, has underscored the positive impact of traditional finance's embrace of cryptocurrencies. Should be embracement, I think, but I don't know who proofreads these things. Armstrong revealed that Bitcoin exchange traded funds, or ETFs, have emerged as the second largest commodity ETFs in the United States, trailing only behind gold. Interesting to note that's a fact already. These were adopted, about a little over a month ago, and they're in second place already. Notably, Coinbase currently serves as the custodian for approximately 90% of the $37 billion worth of assets held within Bitcoin ETFs. This signals the platform's pivotal role in facilitating institutional investment in the crypto market. Coinbase Custody is a regulated entity and qualified custodian. I'll get to that in a moment. However, this raises the question of whether should one entity hold this huge majority. Man, this is terrible. Who should hold this much of Bitcoin ETF assets or not? Looking at the strong inflows into Bitcoin ETFs, U.S. banks have also started showing interest in offering custodial solutions for cryptocurrencies. I'll open that up and talk about that in a moment. So I mentioned this before, and it's not a surprise. Banks are going to talk about holding Bitcoin. Chances are that since a majority of the U.S. banking institutions operate under the purview of the SEC, they might receive approval in the coming time. That's part of the reason why the SEC approved the ETFs. I added that part myself, but it's pretty obvious right now. Latest report from Coinbase highlights the significant institutional inflows into the 11 current U.S. spot Bitcoin ETFs, totaling over $4.2 billion year to date. The report underscores that institutional investors' adjustment to the new exchange-traded fund, ETF, I don't know why they have to explain it again. The environment is anticipated to uphold a strong foundation for Bitcoin's market dynamics. Here's where it gets interesting. Plans ahead for 2024. Brian Armstrong, again noted as CEO of Coinbase, it's getting redundant. It outlined the company's strategic priorities for 2024. These include expanding trading fee revenue through international growth. So they're going to expand internationally. And derivatives. Okay. Okay. That is part of the problem. Enhancing utility in crypto through payment solutions, such as instant and free USDC transfers on I guess Coinbase, and evolving Coinbase Wallet into a comprehensive on-chain super app. I'm going to talk about that app in a moment. Last two paragraphs here, I believe. Yes. Additionally, Coinbase aims to continue advocating for regulatory clarity in the crypto space through legal avenues, continued contributions to super PACs. So they're going to lobby DC and promoting favorable legislation in Washington, D.C. So they're going to get in bed with DC people. Not a surprise there. Armstrong emphasized Coinbase's strong financial position and its commitment to compliance, which has proven advantageous compared to its competitors. With these foundations in place, Coinbase is well positioned to drive forward the adoption of crypto and contribute to the evolution of the global financial system. Okay, well, highlighted in this article was that other one that I clicked on, which was not the showing interest. U.S. banks have also started showing interest. Let's jump over to that. Top U.S. banks are fighting to get a piece of the pie in the spot Bitcoin ETF. I'm not going to dig into all the details lists. You can read this on your own, but basically it's just saying the banks want to get involved. I don't want to bore you and read all that, but you can read it. But I do want to highlight a recent tweet that I discovered from a person named Lauren Dowling. Who is that? She's the product lead for Coinbase Commerce. What is Coinbase Commerce? Coinbase Commerce, they're evolving the product, much like we said about Coinbase, and they're evolving their wallet. Here's one of their evolutionary moves. We built Coinbase Commerce to be the most seamless way to accept crypto payments, but customers were struggling with operational challenges. So highlighted down here further, delivering these capabilities on the Bitcoin blockchain without smart contracts and stablecoins. So she's blaming both those things, which is also false because there are stablecoins and smart contracts on the Bitcoin blockchain. They therefore made the difficult decision to remove native Bitcoin and other UTXO support. Okay, so enough of me reading you guys stuff. Let me drop out of here and I will talk to you guys face to face once again. So first off, dropping UTXO support and dropping native payment support, that means you have to have your Bitcoin on Coinbase to use their Coinbase payment option to pay merchants using the Coinbase app. So in other words, if you walk into a place that says we accept Bitcoin and they only use the Coinbase wallet, you can't pay them from any wallet but a Coinbase wallet, which means you would have to put your Bitcoin onto a Coinbase wallet, let them custody it, and then pay the merchant. Now, I don't know about you, but we always say, not your keys, not your coins. You want to have your own custody of your crypto, especially Bitcoin. So why would you leave it in a Coinbase wallet? So this seems to be a problem. This is it's a highlight of what's coming. Okay, so and again, talking about derivatives in that article, they pointed out about derivatives. That's been a problem for what? The whole point that we wanted this ETF, the spot ETF, is because a spot ETF means you must buy the actual Bitcoin. You're not going to be in a derivative market. You're not going to be buying things that are tracking stocks or track the price of Bitcoin. You have to have the asset in the ETF. That's the driver, because you have to buy Bitcoin in order to be in a spot ETF, which lowers the liquidity of what's available in the marketplace of Bitcoin, which drives the price upwards. Now, if you're going to allow derivative products and you're going to build derivative products and raise your fees, you're doing all the wrong things, Coinbase. That's what's really happening. But most people that are new to Bitcoin are not going to understand this, much like if a normal person that has not been exposed to Bitcoin yet walks into a bank, and I'll pick one, Bank of America, could be any of them. But let's say Bank of America says, hey, you want to hear about our latest products? We're offering Bitcoin. Well, they say, well, I've heard a lot about Bitcoin and you can custody it for me. Yes, we can. Open up through Coinbase, hold it, whatever. They don't have their assets. And then a bank bail-in type event happens. Some people are calling it a 6102 event. And that was an executive order in 1933 when FDR seized all the gold. That's what executive order 6102 was. But a bank bail-in could be similar, where let's say that bank has, let's say you buy Bitcoin and let the bank hold it for you, okay? Because you don't know any better. That would be 90% plus of America, or probably the world, but at least America would probably be the right answer there. So you buy Bitcoin, you leave it in your bank because you feel that's where it's safe, and we know better. We know that your assets when you put anything into a bank, it's a loan to the bank, and it's not your assets anymore. Okay, so that's why you shouldn't leave very much in a bank, if at all. If you leave your Bitcoin in there, they can seize it, they can bail it in. It's so many different ways that they can take your Bitcoin. And Coinbase can facilitate that, and they're actually making that easier with forcing you to use Coinbase wallets and not accepting native wallets or any other wallet to pay merchants that use a Coinbase wallet. So the more that they push Coinbase out into the marketplace, the worse it's going to be for the Bitcoin community overall. And the intelligent user of Bitcoin and crypto that knows better than to leave it in a wallet like Coinbase. So lastly, Coinbase, the problem with 90% of all ETFs being custodied by Coinbase is now you have a centralized entity. Again, if Coinbase gets nationalized, if Coinbase gets bailed in, if Coinbase, for whatever reason, has a liquidity issue, and we know that there are less and less Bitcoin available on Coinbase, they're being pulled off daily, and the ETFs are snapping them up. And pretty soon, all the available Bitcoin that's allegedly available in the liquidity marketplace of Coinbase will be gobbled up by the ETFs, probably by the time the halving arrives. So where are they going to get their Bitcoin? Well, they're going to introduce derivatives. They're going to introduce other products, and they're going to not have any Coinbase, but I'm sorry, not going to have any Bitcoin on Coinbase, but they'll still try and sell you something Bitcoin-like. So these are the problems that are on the horizon, and most people aren't going to understand it. And if you have a retirement account that gets, and you see the stock market starts to tumble, which a lot of the big whales are starting to sell their stocks on Wall Street. They'll move money into something else. Where are they going to move it? Hey, how about we'll move it into a Bitcoin ETF, which happens to be on Coinbase, which then gets nationalized, and then boom, everybody's retirement, all their savings, all their stock market gains, all get nationalized, and everybody loses all their equity, all their value. So think about the possibilities here and how to prevent it. The way you prevent it is by having your own wallet, not your keys, not your coins. If you have your Bitcoin and you're self-custodying it, and you know how, like I teach you, or like Dylan teaches you, or that we teach you many different ways. And if you need to know more, please leave a comment down below. Reach out to me, send me a message on our websites. Reach out to us, and we will teach you more about self-custodying. But you need to learn how and avoid this potential trap, which is growing bigger and threat every single day. So a lot said today. What are your thoughts about Coinbase holding so much in the ETFs and what they're doing with their Coinbase wallet and their merchant and forcing you into Coinbase wallet? What are your thoughts? Leave them down below. I read every comment. Really appreciate you spending your valuable time with me. Like, share, subscribe. Really appreciate it. I'll see you in the next video. Take care.